Good afternoon, everyone. Welcome to the Audit and Governance Committee. Before we start, just a bit of housekeeping. There is no fire alarm expected today, or fire alarm test expected today. So if it does sound, please follow the signs to the nearest fire exit and meet at the fire assembly point in the Civic Square. Please can I ask that you use your microphone when addressing the meeting and that it's switched off when you're not using it. Please ensure your mobile devices are turned to silent. And this meeting is being broadcast live to the internet and will be capable of subsequent viewing, subsequent repeated viewing. By entering this meeting room and during the course of the meeting, councillors are consenting to being filmed and to the use of these recordings for webcasting. So the first item on today's agenda is apologies. Are there any apologies today?
Yes, Chair. So through you, Councillor Stevens has given apologies, and we've also received apologies from Councillor Cuddihy, and Councillor Noble is substituting.
Thank you very much. Item 2 on the agenda is declarations of interest. Do any members have any declarations of interest in respect of the agenda? No? Excellent.
Sorry, on a point of order, just on, in terms of the elections by thirds or whole, is there a general dispensation for members?
Yes, Chair. Okay, thank you for that clarification. Item 3, minutes of the last Audit and Governance meeting of 10th of September 2024. Is committee happy to approve those? Okay, thank you very much. Item 4, Chair's urgent business. I have none. Item 5 is the Plymouth City Council audit plan for 2023 to 24. And I believe Jackson from Grant Thornton is going to present this. Jackson, welcome, and over to you.
Thanks very much and good afternoon, everybody. So if I just do a very brief introduction, first of all, because I've not met you before and you've not met me. So you're used to seeing Paul, one of my colleagues. Paul, at the end of the 22-23 audit, reaches his 5-year term that our ethical standards say we need to rotate. So for 23-24 onwards, I will effectively be taking on Paul's role. So I will become the City Council's key audit partner from 23-24. And the 2 reports on the agenda today relate to that financial year, hence why it's myself and rather than Paul. You will have also seen David Johnson at various points as the audit manager. So David continues to support me. So there's the continuity there. So lovely to meet you all. If I move on to the first agenda item then, which is the audit plan. This is largely in relation to our financial statement audit responsibilities. I won't go through either report page by page, but if I pick out the key items. So if I just start on, so it's PDF page 13, it's printed page 9 of the agenda pack entitled Key Matters. So I'm talking here about 23-24, but I'm also conscious that you'll have no doubt had lots of conversation on earlier financial years and be aware that 2019-20 onwards still remain open. So just a very brief update from my understanding, having spoken to Paul and David. So we've received the updated 2019-20 financial statement and are in agreement now with those versions. And we're also close to finalising the 2021 audit work. Both of those audit years will receive a full audit opinion, if that makes sense, with 21-22 and 22-23, then receiving the backstop opinion that I believe was discussed at previous meetings. You'll be aware, I think it was confirmed, that the date for that backstop is the 13th of December for those financial years up until that point, so a month and a day's time. So whilst those audits ongoing, they're still Paul's responsibility, but clearly it's for me to understand those and also understand the impact on 23-24 of having those 2 backstop years, and that will feature in my own audit opinion for 23-24 and onwards. So I just wanted to set out where we were briefly on those previous years, before then focusing in on 23-24. So page 13 then of the agenda pack sets out introduction and headlines. So in terms of the risks in respect of our financial statements audit, they are similar, the same as you will have seen previously. So there's an assumed risk for all auditors of management override of controls. We have to include that as a risk for all of our audits. And then the other significant risks we identify are around key estimates and judgments within the accounts, largely around valuation of land buildings, the council's investment property portfolio, and also the defined benefit pension liability. So that remains changed from previous years. We audit to the concept of materiality, so it's not to the pound or the penny. The materiality we've determined for planning is 7.7 million. That's slightly down on the 2021 value of 8.2 million, and that's largely down to updates within the financial statements themselves around the numbers, and also a consideration of those backstop audits and what that means for moving forwards. Value for money I'm not going to touch on within this report because that's the focus of our next agenda item. In terms of the audit logistics, so 23-24's audit is underway and has been since September. My impression is we're making good progress on that, recognising the challenges that we and officers are facing of having multiple years of audits open at the same time. And the next backstop year then for this financial year is the end of February 2025. So our work needs to be concluded by that point. In terms of reporting our findings, later on in the draft report or the report on the agenda, I'd suggested there was a committee on the 14th of Jan. Reading through the papers on the work programme, I think we've got one in February where our findings are now penciled in to come to. So I think that's the committee date that we'll be intending to report our detailed findings on the financial statements audit. As I said, I'm not going to go through all of the pages. There's lots of information in there that we're required to report. Those would probably be my key takeaways for members. So at that point, I'll open to any comments or questions.
Thank you. I open this up to the floor. Any questions? Councillor Finn.
Yeah, it's just reference page 15 regarding the property evaluations. Could you expand upon what they believe why they believe the valuation of the land in buildings pose a significant risk? We clearly have our own valuation experts appointed and presumably are suitably qualified chartered surveyors and valuers, and given the true market value. So where is the significant risk on that point? I'll do that one first.
So through you, Chair, thanks for the question, Councillor. So I'll be honest, if you look at any local government audit plan, this risk will appear within it. The reason being it's such a significant value on the council's balance sheets in many millions of pounds when compared to that £7.7 million materiality. Absolutely, the council has a valuation programme, a portfolio and valuers who value that. The valuation, there are some inputs that can be agreed to base evidence, be that a lease agreement or a floor plan, but there are some other assumptions included within that, and a small change in one of those assumptions can lead to quite a significant change in the value of an asset. We officers do appreciate that ultimately this number and the valuation of land and buildings doesn't impact upon council taxpayers because there's no impact on the general fund. However, as the code is currently written, the code being that the manual, I suppose, that officers have to produce their accounts to and that we have to audit to, this is seen as one of the key estimates and judgments, and therefore we do need to consider that this is a significant risk. We're not saying that they are wrong, but we need to do further work to support those numbers within the financial statements. And certainly from a regulatory point of view as well, it's absolutely expected that we would be doing so. So that's the situation we find ourselves in. I think I won't say any more on that.
Thank you. Did you have a supplementary, Councillor Finn?
Yeah. Just to follow up on page 16. It's just an exploratory question, really, just to how you define it. Obviously, having paid off the pension deficit, there should be no yearly charge to the council. The pension net liability is considered to be a significant estimate due to the size and numbers involved, 27.5 million, and the sensitivity of estimate to changes in assumptions. What is the risk of material misstatement with regard to that 27.5? Where's that accumulated from? What's the methodology applied to that, please?
Sure. So through you again, Chair. So the accounting standard that the council has to follow is called IAS 19, and that sets out how at each balance sheet date the council has to make an estimate of should all of the pension liabilities crystallise at that specific date on the balance sheet, how much would they need to pay out to all current future pensioners to discharge that liability. So similar to the land and buildings point we just discussed, the council uses an expert to undertake that determination. So an actuary each year will calculate that number that will appear on the balance sheet. Again, various estimates within that, so discount rates, future mortality rates, future salary increases, etc. So again, 0.1% change on that will have many millions of pounds of impact on that number. What you tend to see is each year that liability moves by a significant number, again, because the actuary is constantly updating those estimates. So it's similar to that land and buildings point. They're so sensitive to changes in assumption that we do need to consider that as a significant risk, and we do so. It's slightly different to the council then having its triennial valuation of the pension fund, which would set the contributions that it must pay over the next 3 periods. So the triennial valuation looks at the cash that is actually going out of the council. This point here, and the IAS 19 point, is purely an accounting consideration, so it's a technical point for the financial statements, as opposed to a cash point that David and colleagues would update you on in terms of triennial funding. Does that make sense? So it's very similar again to the land and buildings point from our audit work here. We need to make sure those assumptions are reasonable, otherwise that number could be significantly different within the financial statements.
Thank you, Chair. Just one final point. Obviously, we as a council are heading for the first time in 27, for the first time in our history, towards £1 billion worth of debt and liabilities. Where's the debt ceiling on that? How is it and methodology applied to a debt ceiling? Because obviously there's a lot of interest payable and that will have to come out of revenue as well.
So that might be one for officers to talk about the Treasury management strategy.
I was going to say, through you, Chair, maybe we can pick that up later on in the agenda when we do the...
Yep, that seems
TM
most
strategy.
appropriate. Thank you. Councillor Nicholson, you've had your hand up for a little while.
Thank you very much indeed, Chair. Just on follow on the valuation of land and buildings, presumably as a schedule you've seen, you're not just basing it on an overarching figure evaluation. I wondered if officers could supply members with a schedule of the current valuations that have been accepted as forming part of this report. So that's the first question, if I may ask, please, Chair.
The last set of valuations would have been, sorry, through you, Chair, sorry. I wasn't expecting to speak today. So the last set of valuations were undertaken for the 23-24 accounts. We have a schedule that we review every year. We always undertake material valuations annually so that we can make sure there isn't too much extra sensitivity around a significant increase or decrease in valuations. And other than that, we have a 5-year rolling programme of asset valuations, which is undertaken by our internal valuer within the council. There are a couple of properties that are valued by other organisations. For example, Tamar Bridge is undertaken through Cornwall Council, and we absorb 50% of the Tamar Bridge within our accounts. And the energy from waste plant is valued through the Devon County Council property team. So we undertake a review every year of the asset valuations. If you wanted to see a schedule, we'd be happy to share that.
Fine, that's very useful, thank you. And if it could be shared, that'd be great news. Just in terms of the actual valuation, it would in effect also take in negative value, presumably. It's not all assets are positive. certain assets have got liabilities. So does the valuation take into account the liabilities as well as any net sort of value?
We don't have any with negative values. We do have assets that, or capital spend that we incur on assets that aren't the council's, in which case we would apply what we call REFCUS, which is revenue expenditure funded from capital under statute. So we would write off the expenditure through revenue and through the accounts, but it doesn't hit the general fund.
I'm not worried so much about how these things, the mechanics of the council has made in the past certain disposals on the basis of negative liability and sold assets for £1, which would indicate that the value of the asset is more of a liability than it's actually an asset. So how's that dealt with in the accounts then on valuation of land and buildings?
All assets would have a value. If it's sold for £1 because we've made an arrangement with another organisation, then we would write down the asset value at that point in time when it goes through the accounts.
So that's useful. Perhaps if we have the schedule, then that would be really useful. And just one further question on a totally different subject. Apologies, I was on holiday at the last Audit Governance. So the capitalisation direction that's with government at the moment that you alluded to, 13th of December, I think. Are we optimistic of actually getting an answer out of government on the direction, please?
Through you, Chair, so the date that was mentioned was to clear the backlog of audits, not necessarily the direction itself. So, yeah.
So back to the substantial question then, do we have any answers, because it's referred to in the auditor's report, of getting an answer from government in relation to the capitalisation direction? And how we've been tracking, proactively tracking with government, some sort of answer for us?
Sorry, is that mentioned in your report? Have you got a page reference, Patrick?
So I think there is a mention of it in the headlines element where we talk about the old year audits, David. So that is on page 9, stamped of the agenda pack.
Okay. Well, just because I've maintained all the way through that I will keep audit and governance updated on where we might be. So I will share where we are, which is I have written again to say we had a SIP for review back in July. I've not had a report that I can share with you, so I wrote to them just yesterday to say, can I know what the latest position is? So I will keep everybody posted as and when I get a response back.
Thanks. So from a risk perspective, Chair, it'd be useful at some stage, whether we cover it today or at a future meeting. We last year altered the budget meeting of the council because of this whole issue. So there's a risk that we could get into the next budget cycle and we've got an issue again. So I'd like to know, at some stage as a member of this committee, how the council is going to deal with that in relation to setting the next budget. And, are there any more proactive actions that we can take as a council to try and get government to respond and for us to be able to complete the actions of the auditor, but actually move on the accounts?
Through you, Chair, I'd be the happiest person in this room if I got a response saying that we can actually move on. Believe me, put this behind me. So we did get the minded to, which was comfort enough for me as Section 151 officer, and also in dialogue with our external auditors to allow us to proceed with business as usual. So we set this year's budget. We're in the process of setting next year's budget. But I have written saying time is moving on. As soon as I get a response, I will share it around.
Thank you very much.
Councillor Rainsford.
Thank you, Chair. I'd like to move down to page 39, the governance section. Basically, reasonably happy with the council's arrangements, but you recommend the reporting of high level...
Councillor, I think that's the next agenda
Oh, is it?
item.
Apologies.
Yeah.
But I've jumped on. You're right, I have. Apologies.
But hold that question.
I'm so enthusiastic.
Councillor Finn, you wanted to come back in.
No, I made the same mistake as Councillor Rainsford. I was 4 pages ahead of where we are from 35 to 72, so I'll hold for the next one, please.
Okay. Any further questions on the audit plan for 2023 to 24? No, excellent. Right, we'll now move on to agenda item 6, which is the interim annual report for 2023 to 24. And again, Jackson, over to you.
Thanks, Chair. So the second of the two reports focuses more on our value for money responsibilities. So that's looking at the Council's arrangements in respect of financial sustainability, governance, and improving economy efficiency and effectiveness. You're correct that the title is an interim version at the moment. The reason for that is I can't issue this as a final version until I've issued the opinion on the financial statements, which we've just talked about. So I expect the final version to be issued in around 3 months' time. However, it's really important that we do report findings from value for money work as soon as possible, and indeed moving forwards, the intention is that that must be done by the end of November each calendar year, hence this timetable. So we're moving into that sooner. Although it says an interim version, this report looks at the arrangements in place for the financial year 23-24, so up to the 31st of March 24, and therefore I'm not expecting that this report would change significantly given those arrangements were what they were in terms of that timescale. But that's also important in considering where we get to on some of these issues, because I appreciate some of them will have moved on in the current financial year. As external auditors, we tend to live in the past and look backwards, so we're reporting on what has been. So Paul, my colleague, would have reported the 22-23 financial year version of this report to yourselves back in March, so around 6-7 months ago. Within that report, he identified 2 significant weaknesses. So one in respect of financial sustainability, and we recommended that the council should update its medium-term financial plan, medium-term financial strategy in respect of financial sustainability. And we also raised a recommendation against improving economy efficiency and effectiveness around children's services and the Ofsted report that had been reported and the improvement notice at that time. So we're around 6-7 months on since we last reported. In terms of financial sustainability, and I'll take the 3 criteria in turn, we conclude at the moment, and at the time we were doing the work and finalising this report, we concluded that that recommendation made in 22-23 should remain open in respect of updating the MTFS. Now, I know David and colleagues presented an updated version of that report to Cabinet yesterday. That wasn't available to us when we were doing the work. So this report doesn't cover that new document, and that's what I'm saying around the timing of these arrangements. So we've not done any detailed work on that document yet. That will be covered in our next version of this report, and hence, in terms of a timing point, why that recommendation here is stated to remain open. The other area we've focused on and raised a key recommendation within this report links to that, and it's around the council's transformation and transformation programmes. So we can see that the council is engaging in some transformation. We've seen evidence of the change board that officers are discussing savings transformation regularly. I think what we've yet to see is how the council's bringing all of those different programmes together and how it can, I suppose, assure yourselves, the public, us, that the scale and pace to deliver the transformation that's required to maintain that financial sustainability can be evidenced. Bringing together a single plan, reporting that regularly to Cabinet, what are the outcomes, timescales, what are some of the schemes. Now clearly, given the MTFS has now been updated and reported, I would expect the next step in that process to be how that transformation plan supports the delivery of the council's financial strategy. And therefore that's why we've got 2 slightly different recommendations there, one around the updated MTFS and us reviewing that, and the second around the transformation and savings to support that longer term financial sustainability. So those were the 2 key recommendations raised through this report. We also raised 2 improvement recommendations. So improvement recommendations are the lowest level of recommendation that we're able to issue. One of those relates to including some sensitivity or some further sensitivity analysis within that MTFS to show some of the potential range of outcomes for some of the key income and expenditure drivers, to just give that bit of a better overview of what likely outcomes could be and what the range of outcomes could be. And secondly, around clearly reporting the split between recurrent and non-recurrent savings each year, so that yourselves, public, other stakeholders can really understand the level of non-recurrent action within each budget to balance it on each budget year. So governance is the next section. We didn't raise any key recommendations on that point, although we raised 2 improvement recommendations. The first was around the corporate risk register, and I suppose our stand back of that, suggesting there were some anomalies or competing bits of information. We pull a couple of those out later on in the report, so just suggesting that there is that review again of the corporate risk register and a bit of a stand back, saying what other information have we got, and does that tell us a similar message. The second then relating to the reporting of some of the high level improvements or findings made as a result of the fraud investigations that colleagues at Devon Audit Partnership and Ken do each year. What we're not suggesting here is detailed reporting on what the frauds were, how they occurred, for obvious reasons. But again, that stand back and saying, given some of those trends, or given what was seen, what has the council implemented to ensure that they don't happen again, or what's the learning from those? And then the final area that we comment on is improving economy, efficiency, effectiveness. As I said, in the last report, we raised a key recommendation around the improvement notice that had been put in place following the Ofsted inspection. Obviously, I said earlier, this covers 1st of April 23 to 31st of March 24. 11 months of that period, the council was under an improvement notice as a result of that Ofsted inspection. And in November 23, the joint local area SEND inspection, so the Ofsted CQC inspection, also raised a further improvement notice. So what we try and do is reflect that actually the council did respond very promptly to that first improvement notice, put in place arrangements that have ultimately seen that first Ofsted improvement notice being lifted in April 24. So absolutely the council took that seriously. However, we would conclude that arrangements weren't appropriate during that financial year because the council was in that improvement notice situation. So the key recommendation there focuses more on the joint local area SEND inspection and ensuring that that improvement notice is lifted, and also considering the new children's strategy, the Achieving Excellence strategy, and ensuring that that's fully costed and built into the council's financial plans, because clearly the improvements will require funding, and it needs to be understood how that funding can come. The final improvement recommendation from this year then was one in respect of this committee actually, and it's on the reporting of the council's procurement readiness action plan to this committee. So the new procurement legislation that was again deferred until February 25. Again, just keeping this committee updated on the governance process and making sure that the arrangements are in place, that once that legislation becomes enacted, that the council is ready to go. I'm not going to go through the rest of the report. The rest of the report talks through the detail of those key findings. I think it's helpful that I just pause at that point. Later on in the report as well, we also cover the progress on the recommendations raised in previous years. So that covers from page 68 onwards. There are a couple that are still in progress. The majority, we're saying, have been addressed and closed, or are in progress and will be closed. So that's everything I would say, Chair. Thank you.
Thank you, Jackson. So I'll open the floor. Does anyone have any questions on the mid-year report? Councillor Rainsford.
Yes, the question I had been going to ask you answered brilliantly during the presentation, which was on the governance issue. But can I ask, the MTFS sensitivity analysis, is that something which, prior to this recommendation, you would have expected the council to have in place? Because clearly incidents like the pandemic, like the cost of living crisis, will affect things like council tax collection. Is that something that we had notably missing in comparison with other authorities, or is it something which, partly as a result of the impact of the pandemic and other things, we've become more acutely aware of?
So through you, Chair, it is something we do see at some other authorities. It's becoming more commonplace, and hence why I suppose the level of that recommendation is, it's an improvement. We're not saying that the arrangements that the council has at the moment aren't appropriate, but what we see elsewhere, this would add to those arrangements and improve them, hence why we've recommended it. I think that the points you make around some of the sensitivity around COVID, etc., that's brought it to the fore a little more, and hence why we would recommend that all authorities do this, just to set out within their document what risk potentially there is, or indeed what opportunity there is. It's not just risk that we're talking about here.
Thank you for that. It's sort of almost like having a margin of error on either side to allow for these unknowns. So thank you for that. Appreciate that explanation.
Councillor Fenn.
Hi, Jackson. Just to come back, when you look at page 49 and page 47, which is read on the risk register, it's noted with regard to the figures that there's of which 6.697 million currently has no mitigations identified. The mitigations that have been identified are amber risk rated, therefore not guaranteed to deliver. Against page 49, which says the capital programme for the period 23-24, 27-28, 398.2 million. External borrowing has risen by 97 million to 649, which means an additional 7.3 million per annum to be added to the recalculation of 25-26, and obviously that will be included in the medium-term financial plan. This is just a shame we haven't got that with us today. However, do these figures sort of point towards our expenditure actually exceeding our resources? Are they meetable or not? And what mitigations would need to be put into effect thereafter, to try and rectify these? And just a second point to that is, obviously these figures don't include interest. How would you include interest within these calculations going forward? Jackson.
So through you, Chair, if I take or start that answer, it may be that David or colleagues also need to comment on some of that around the arrangements in place. So the 6.7 billion you referred to on page 47, so that was taken from month 5 revenue forecast reporting that the council had produced. I'm conscious, again, last night, I think, David, correct me if I'm wrong, month 6 or quarter 2 financial reporting went to Cabinet. So again, we need, finalising this report, figures constantly change. That was the point at the time. So David may be able to comment further on where the council is now. Those would include any interest costs for 24-25 that were included in the budget. The numbers on page 49, as you said, relate to the capital plan, and you've pulled out some of the financing costs there that we would expect, based on just a simple review of the increase in borrowing, that we would expect to be incurred. Again, I referred to that updated MTFS, so what we've not been able to do is review that or take a look through the MTFS that went last night to Cabinet. Again, I would expect that to be incurred or included within those future financial projections. David, I don't know if you wanted to comment any further on any of those points.
Through you, Chair. So timing in life is everything, isn't it? So Jackson and I had a conversation about his report being published last week and my report's been published to Cabinet yesterday, which kind of supersedes some of the comments. Now, we are, as we all know, subject to events outside our control. So someone calling a national election kind of shunted timetables. So if that hadn't happened, we would have been putting the MTFS forward in September, and that would have been rolling into this report, and this would look a little bit different. Given that this is, and we have to keep reminding ourselves, a backward look to what happened to the year ending March 24. So a lot of things have happened. I always say to the auditors when they ask me the question about sustainability, I say, well, we're still here. So this is a report to March 24 saying there's a red risk to our sustainability. We're in November, we're still here. We're closing in on this year's outturn report, and we're pushing ahead nicely with next year's budget. So there will always be a risk, and I think it's right that it should be flagged up as red. There are other forums that we debate, including full council when the MTFS goes forward in a couple of weeks. The actual numbers, I think this is, it's pertinent to this committee to think about more, are we actually putting the governance in place and doing the right things? So it's absolutely right that we get an independent view of our state of affairs, but the actual numbers are not, I wouldn't bring those in here, and I certainly won't bring the MTFS in here for you to have a look at. That's for a different scrutiny panel. I think that's probably answers the question.
Thank you. Councillor Nicholson.
Thank you. Just a quick supplementary. Given the fact we've just had a budget, does the auditing community give any view on the analysis of the budget insofar as local government's concerned? And are we likely to get anything before we set the council budget in February from our auditors in relation to the national budget?
So I think the short answer would be no. We wouldn't say to David, have a think about this when you're setting your budget, and probably rightly so. If we're the independent organisation coming to scrutinise or review that budget, it wouldn't be right that we say, consider these things. Clearly, as a firm, there will be press releases on what might the budget mean for you, not necessarily just local government, tax, etc. But we wouldn't expect to provide David with a detailed summary of what we think about the budget, and I'm not sure he would expect that from ourselves either.
I think just to add to that, there's a very clear relationship here, isn't it? Which is, I work and put the numbers together, and then someone comes in and gives me a critique of it, and that's life, isn't it? We put up with people like Jackson looking over our shoulders, so that's fine. I mean, that said, we do attend national forums, and we do get representation from audit committees and the different firms, etc. But it's more of their view of the world. They can't tell me whether I've got the numbers right or whatever. So
No, I'm not suggesting.
The answer is no. But
well, I'm not suggesting that they would tell you or tell the council how to do its business. But if I have been a private client of an accountant before, and when a budget is given, there's a general opinion given by, an independent opinion given. I just wondered if councillors had any ability of having our auditor's opinion of the national budget insofar as local government's concerned. You belong to forums, David. We don't. So I just wondered if there was any, you might be able to share some of the sort of local government narrative that I don't know if the LGA, well, the LGA has given obviously an impression of the national budget, but I think it would just be useful to know those who are more involved in the finances of local government had an opinion. You can supply some narrative, can you?
well, yes, of course, I can always provide some narrative. As you say, the local government association come in very quickly with their view, and that's quite right, isn't it? Because that is their domain. There are lots of opinions that come floating in from all the different organisations. We're part of Sigoma, for instance, and they lobby and take what they think out of the budget announcements and pass it back to government. So I'm quite happy to share those kind of documents if that would be helpful. The main thing is about are we as a sector sustainable, and are we getting the funding and the recognition? So yeah, happy to share that.
Any Councillor Rainsford?
Yeah, just very quickly, improvement recommendation 5, Chair, on procurement readiness action plan, says it should be reported to this committee in a timely manner before the deadline of February 25. Our time, I don't think this is on our work programme. Is this something that we actually have to do by February 25? And if so, should we perhaps later discuss it as part of the work programme?
Okay, thank you. I will. Thank you.
Sorry, just to try and run off a little bit. I think at the last committee, we actually brought in a procurement strategy, which we said, again, was a response to a previous Grant Thornton recommendation that we should have one of those in place. So that was the first step, to get that in front of you, and you approved that. And then the next step, I think one of the actions we gave ourselves was to then come back in a timely manner to make sure that we met the deadline. So it should be on the work programme. If it's not, we can make sure it is.
Thank you, it was just getting it in before.
Thank you. So if there's no further questions on the interim annual report, we'll move on to the next item, which is Kenneth Johnson. This is the counter fraud half-year report. Ken, over to you.
Thank you, Chair. Good afternoon, everybody. Good to be here again. I think I missed the last one, so apologies. Before you is the half-yearly report, and I might as well deal with it straight up, that one of Jackson's recommendations from Grant Thornton is that we provide a bit more granular detail, maybe in the reports going forward. This has already been accepted, as you know, Devon Assurance Partnership Act for sort of multiple partners across the region, and this has already come up in other sort of audit committees. So, yeah, more than happy to provide a bit more granular detail. Obviously, I'll have a chat with Jackson about just how granular that gets. But yeah, certainly there is scope. Everything's on record, so we know exactly what we've got and what we've been doing. So that won't be a problem as long as we sort of agree on what that looks like. So just to take you through, it's not an anomaly. It's 100 allegations that we've received so far this year, bearing in mind that this report was written probably a few weeks ago, and it's gone through the due process. So things have moved on a little bit, so I will update you as we go through. The National Fraud Initiative is underway. David would be happy to hear that all of the data sets have been uploaded from Plymouth City Council. They're ready to go, and we'll wait for the matches back in January, February 25. We continue to, and this is sort of part of the prevention work that we do all the time, every month for Plymouth. Monthly rolling data matching exercises, an awful lot of, rather than waiting for referrals and that sort of thing to come in, we're trying to prevent fraud and error entering the system in the first place, which is also a lot easier to deal with at that point. And the general support and advice for managers and staff that we deal with on a daily basis. So that's the sort of executive summary, if you like. We're continuing to work with your officers and your management and staff across the piece. And as part of good governance, we continue to report to this committee, and we will. But just to sort of take you through a couple of things that have been obviously developing, and without jumping straight into, there's a new offence out of failure to prevent fraud. We've been waiting for guidance for quite a while. Obviously, political events have overtaken the scenario that they were going to provide details before this point. That came out on the 6th of November, so that's literally just come through. It is something we're going to need to look to and address the policy and strategy, and we'll also need to discuss with your colleagues in risk, because that requires the council to re-evaluate its risk around the failure to prevent fraud. The good news is on this is that it's an outward facing offence, so I say good news, it would mean that somebody's committing fraud for the benefit of the council. Unlikely, but not, you know, there is a risk there, okay, especially with potential arm's length management companies and that sort of thing, so we need to look at it. So as I say, it has developed a little bit since we put the report through. The savings are about where we would expect them to be for this time of the year. It always tends to be heavier towards the back end of the reporting year, basically because a lot of the work that we do especially with the NFI, is preparatory work at this point. So the results and that sort of thing will come after January, February time. Again, Section 7, further information from members, the anti-fraud, bribery and corruption policy, that will need to be updated. As I said, that information has come through, but it's literally been late last week. So at the next meeting, I would expect to have the new policy and strategy in front of you for sign-off. So in conclusion, really, it's business as usual, but there is still a lot of good work being done, but we need to review that now with this latest offence and drive it more from a risk perspective. It is good work, but yeah, we've got a lot more work to do now. Happy to take any questions.
Thank you, Ken. Councillor Nicholson.
Thanks, Chair. It's not a question so much, just to thank Ken for the work that's been reported here, and I think the council should be publicising the fact that 100 allegations have been investigated and we've saved just under £400,000. I think that message we need to keep reinforcing, so I'm not sure if we had any press on it, but if we haven't, I think we should do. So, well done.
Thank you, Councillor Nicholson, and I sort of echo your thanks to Ken for his continued good work on that. Any other questions? If not, we'll move on to item 8, which is the internal audit half-year report. Louise, I think this is yours.
Thank you, Chair. Good afternoon, everyone. On page 89 of your report pack, you will find the internal audit half-year report. This is a summary of the performance against the internal audit plan to date for the 24-25 financial year. Members should note on page 91, the head of internal audit mid-year assurance opinion of reasonable assurance. As at the 30th of September, 100% of audit assurance opinions were of reasonable assurance, with 100% of grants certified also without amendment. Members are asked to note there were 2 limited assurance audit opinions given in this period. These were for fuel cards and also adult social care service provider viability. These audits were actually at draft point at the time that this report was written and are currently being finalised. Whilst this will impact the percentage of the overall assurance opinion, it will actually not change the audit opinion at this stage, but members are asked to note that this will obviously be finalised and you will have a couple of limited assurance reports this year so far. Overall, reasonable progress has been made, continues to be delivering in the internal audit plan, with 67% either in progress or complete at the half-year point. There have been a few changes to the internal audit plan agreed by this committee back in March 24. We have 2 new additions to the plan. Those are adult social care client contribution income and the LGA improvement in insurance framework at the request of directors. There's also a change to the planned audit of budget management. We're going to extend the scope of that audit to include evaluation against SIPFA's financial management code. We have deferred homelessness at this point in time to include the work around adult social care client contribution income, but it's hopeful that we can actually get homelessness in towards the end of the financial year, which is an agreement with directors, as that would be the correct point in time for us to do that work anyway, so that may drop into the following year. Performance management, as reported previously to the committee, was replaced with our work around Plymouth Local Authority company governance, focusing on Destination Plymouth and the 2 bid companies. Full details of the current status of audits planned for 2024 and the associated reported assurance opinions and the recommendations that we've made are included in the table to the report. I think that covers all the points that I wanted to raise, and I'm happy to take questions.
Thank you, Louise. So, any questions on this one from anyone? Councillor Nicholson?
Certainly, the limited assurance in relation to adult social care providers is, it's an ongoing consequence, really, of the lack of funding of adult social care. And certainly the recommendation there in relation to next year's budget is quite key. So what we've found, as I've taken part now in the scrutiny of budget for on and off for quite a few years, but also was the cabinet member for a short time for adult social care, is that the council does need to adequately fund the care providers. And generally, we as a local authority will make savings to adult social care as a block value, say, we're going to say £3 million, and then we use the contracts effectively to diminish what we pay per person in care to the service provider. The knock-on effect is that fragility of the whole sector is massive. So I think it is a point that councillors present today need to take into account when we set the budget, to artificially set an adult social care budget that contributes to this would not be the way to go. And that's really why I'm quite keen to know what the independent opinion of the Chancellor's budget is, that we know a lot more money is going to the NHS. I don't know if there is any material knock-on effect to local authorities through adult social care, but that's the sort of narrative that would be useful before we start getting to budget scrutiny in December. Thanks, Chair.
Thank you, Councillor Nicholson. Mrs Benny, did you indicate? No, no. Anyone else? No? Okay. Thank you for your report, Louise. So the recommendation is that Audit and Governance Committee review and note this report and the assurance opinion statement within this report, and also note the findings within. Is committee happy to do that? Thank you. So item 9, again, this is also you, Louise. This is the internal audit management action tracker for Q2 of 2024 to 25.
Thank you, Chair. Page 112 of our report pack today is the Internal Audit Management Action Tracker for Q2. This is a piece of work that we do as part of our audit plan to track management actions for audits that are limited assurance, so those where the risks are greater, and we need to sort of make sure that those management actions are taken promptly and appropriately. So as of the 30th of September, there were 14 limited assurance audits that had management action outstanding. This was unchanged from Q1 as reported to the July Audit Committee. The table within the report sets out all those limited assurance audits, the number of high and medium priority recommendations made, and details of how many of those recommendations have management action outstanding, those that await significant control change, and those that have been outstanding for more than 90 days of the agreed target implementation date. Of the 123 management actions agreed, 51 or 41% have been implemented, and 72, 58% remain outstanding, of which 44% of those are now overdue. Whilst the number of management actions have overdue has significantly increased from 3% at the end of Q1, progress has been made, with 88% of those actions being partially implemented, with expected completion due in Q3 and 4 this year. The corporate management team do keep a sort of eye on this work and are encouraging the management team within their service areas to take action with regards to these management actions. So we do see good engagement across the council to getting these done. Some of these actions are significant actions that require system changes, system implementation, recruitment, so you can understand why sometimes these take longer than expected. One point to note as well is there's one area that's been excluded as a Part 2 report, so it's exactly the same. The overall details have been covered here, but due to the security nature of this particular area, it's been put as a Part 2 element today. Thank you, Chair. I'm happy to take questions.
Okay, thank you. Councillor Nicholson.
So, Chair, on page 114, we talk about adult health and communities and chasing down debts, those in adult social care. Given the fact that sadly a number of these people will pass away when you're dealing with estates, is there not a danger that people's estates will be wound up before we reclaim the debt, and therefore we're in a write-off situation? If that's the case, what sort of values are we talking about potentially provisioning for write-off?
Through you, Chair. I can't actually comment on the actual write-off ones. That would probably be one for my finance colleagues. What we are seeing is that is absolutely, as the case may be, that people are passing away before the debts are paid. And we are doing a lot of work with regards to adult social services, looking at adult social care income client contributions and also adult social care debt management. Those reports are actually being finalised at the moment, and the results of that will be coming into the report. So that will give you a clearer picture of what's happening. But you are absolutely right. Sometimes there's delays. Sometimes the public's knowledge and understanding of how to sort of provide information for financial assessments is taking longer. So we are seeing delays in actual financial assessments happening. And because those are being delayed, actually people then obviously, can pass away before we actually do get round to actually collecting that debt. So there is a pressure there. The management team are aware of that, and they are actually taking action to understand that, and we are actually doing work with them around that. So there will be further information coming through Audit Committee and Governance.
Okay, thank you. But can I have an assurance that actually the option of externalising the provision of legal support is being considered, as well as trying to have internal resource deal with it wholly through your in-house team?
It's an option that's open for consideration, but we're not considering it at the moment. Generally, it's managed within the legal team.
Yeah, I think the conversation we had, Chair, is that we're potentially writing off money that we could be claiming if we dealt with the administration of the reclaiming of debt. So perhaps we need to put this somewhere on the future agenda for I think it needs further investigation. We need more information on the answers we've been given.
Sorry.
Go on.
Sorry, I was going to say, I think very valid, Councillor Nicholson. My suggestion on this one, we may be, when we're looking at the forward plan, that we invite the team that look at this and give you assurance about the work that's actually in place and the improvements that we're trying to put in place. So I always see it as a failure when it gets to the legal team, because that means the system's broken down somewhere. So I don't think the answer is to outsource or bring more support to legal. It's to get my team working closer with the adult social care team to make sure we don't get to that point. But I think if we could bring that back maybe as an item that you look at.
Mrs. Benny?
Yes, thanks. And in addition to that, could we also have a sense of the waiting times for people and the waiting times for resolving stuff? That would be good. And the numbers. That would be really helpful. Thank you.
Yeah, we'll try and set up the whole context so you can understand sort of the start and the flow through.
So,
So perhaps we can pick it up at the end of because I think that's quite an important thing. The report that's been presented to us from the audit is effectively saying we haven't got enough legal resource. That's what it's saying, David. You're saying it should never get to legal in the first place. I'll be honest, this isn't the first time. I had a case in my own ward a few years ago where the person died, the estate was wound up, and then about 6 months later, a bill arrived. So this isn't new. So I think it's important that we perhaps get it earlier, sooner rather than later on for discussion.
Yeah.
So, sorry, but I think you're emphasising the point I'm trying to make, which is that's not a legal issue. That's my team not getting the paperwork done in the right timely fashion, isn't it? So we'll pick that up if that's okay.
okay. Any further questions on this part of the internal management tracker? Okay, so item 10, I believe this is exempt business and a part 2 meeting. The recommendation is that we pass the resolution under section 100A(4) of the Local Government Act. No? Do we need to go into part 2?
Yeah, through you, Chair. So members will have received Part 2 papers, which cover part of the report that we've just discussed. The reason they're Part 2 is they refer to cybersecurity, which is why they're private. Should members have any questions concerning that page, we'll move into private session. If you don't have any questions about that, we'll carry on to the next agenda item. Thank you, Chair.
Thank you. Sorry, I thought that's what I said when I asked if we were going to go into a part 2 meeting, but okay. So this is item 10. It's pages 119 to 124 of the Internal Audit Management Action Tracker for 2024 to 25. Does anybody have any questions on this, and therefore we need to go into a part 2 meeting? No? Okay. So if committees in agreement will note the cyber governance and user management audit opinion and the progress of management action taken to manage the identified risk. And we are required to go on to a vote on the return to part 1. Are we happy to return? We didn't, because we didn't even go into part 2, so that's fine. We'll just resume business as usual. Thank you for that. Item number 11 is the Treasury Management Mid-Year Report for 2024 to 25. Wendy, over to you.
Thank you, Chair. Right, my report, or I've got 3 reports, like buses, start on page 125 with item 11, which is the Treasury Management Mid-Year Report. The SIP Code of Practice on Treasury Management requires the Council to report on its performance of its Treasury Management function twice yearly. This is through this mid-year report and reviewing the Treasury Management activities through the first 6 months up to the 30th of September, and then it will be an out-term report in 6 months' time. With comparison to the Treasury Management strategy approved as part of the annual budget setting on the 8th of March. The report sets out the key facts on investments and borrowing. There has actually been very little movement from the information presented at the last Audit and Governance Committee, which was based on the outturn at the 31st of March 2024. The notable changes are there have been higher investments made in money market funds as an increase reflecting the short-term investment of surplus funds created where the council have received grants in advance, for example, that will obviously have some future call on. And also through borrowing, we have seen our first 5 million LOBO call in August, and we have got 1 remaining LOBO call in 24-25. Just for members that aren't quite so familiar, LOBOs, these are financing that were predominantly created in 2008, very popular, but the rates have been quite high when we've gone through a period of low interest rates. So now we're taking, the strategy has always been, as soon as we've had an opportunity to come out of a LOBO arrangement, we take it. Admittedly, obviously, at this time, the LOBO, we were paying interest of just over 4%. The offer as part of the LOBO arrangements is the lender can call in that debt and say, we will continue lending to you, but it will be at a new rate, which was considerably higher. So we've accepted there's a cost in the short term because interest rates are still quite high compared to the rate we had it arranged under, but obviously the long term is that we can bring those rates will come down. So that's the key 2 things. Going also look at our borrowing strategy, which has been sort of keen to try and strike the appropriate low risk balance between securing low interest cost and achieving cost certainty through fixing in our borrowing. It's continued to be quite a challenge through 24-25, or the challenge from 23-24 continues. We have now started securing rates at a lower rate following the Bank of England reduction. Just drawing attention to table 3A on page 134 that sets out the borrowing rates, noting that we had secured previously 265 million of PWLB borrowing at lower rates that were ranged from 1.37% to 2.54%. Which has obviously protected the council's interest costs to a degree. We have also got 75 million sort of covered within a interest rate swap, which again has protected the council from the interest rate risk that we've experienced. New borrowing continues to be a challenge during the period of interest volatility with public works loan and other local authority borrowing restricted by the availability of cash from other local authorities and the limitations of borrowing with lenders as a result of us having unaudited accounts, where some lenders will only lend to authorities that have got accounts up to the previous financial year signed off. I think the next point, which will probably answer Councillor Finn's question on affordability, on page 136, we set out our Treasury Management budget and latest forecast. It should be noted the budget for 24-25 did increase by circa 5 million to reflect the fact that there were extra or additional borrowing costs coming through as a result of the interest rate increase that we saw predominantly through 23-24. We're currently forecasting a underspend for that budget of 1.884 million, and this is through two areas. It's through our actual interest payable, where as a result of the Banking for England reductions and being able to secure borrowing, or we've been able to secure borrowing at a lower rate than we had built into the budget forecast, and also our actual delays. We've managed through our cash flow, through getting grant monies in advance or other funding. We've secured the need, or we've avoided the need to borrow as early in the financial year as we might have had to have done. So that has ultimately meant we've been able to make savings on our borrowing cost. Also, on the other side, the interest receivable, we've been able to hold higher balances through predominantly our money market funds, which are our almost instant access saving account, where we invest money today and we could draw it out tomorrow. So it's really quite a flexible investment tool. They've been exceeding the levels of return that we've seen for a number of years, and based on, let's say, higher balances, higher interest returns in the first 6 months of those of this year, we've again generated a savings which have driven an underspend. So I think that at least presents the current year in quite a healthy position. So the report further goes on to present our compliance with prudential indicators, which again are required as under the SIPA code. The one I'll draw attention to is there was non-compliance on page 140 to our the rate of the split of borrowing between fixed and variable. We had a target of 85% borrowing held on fixed rate interest rates, and that's been exceeded. That was as a result of planned borrowing through other local authorities, which would be deemed variable at the end of last year, 23-24, being taken out, with borrowing being taken out through the Public Works Loan Board, as it offered a lower cost of borrowing. We actually found a spike, which was an unusual spike last year, or at the end of last year, where borrowing from other local authorities was more expensive than borrowing from the Public Loans Work Board. So our view is we always pick the cheapest borrower that we can secure from. So that was where our expected borrowing from using a variable rate then moved across to a fixed rate. So it is really to note that we have not complied with that prudential indicator, but it was non-compliance for the right reason. We were securing the lowest cost of borrowing. So that's the main bit of this report. I'll leave it open now for questions, please.
Thank you, Wendy. Anyone? Councillor Finn.
Yeah, thank you for that presentation, Wendy. Just a couple of questions with regard to the long-term debt of the council. What percentage of the portfolio is tied up at 50 years?
If I haven't got it to hand, I will get that information to you. It's a significant percentage of our PWLB is tied up over 50 years. We'll get a profile. Actually, I think we might go, it should be in another report, the Treasury Management Strategy. I'm just going through with 3 reports. I've seen it somewhere and I will find it. But we have got a breakdown of where our debt is, and I'll bring that.
Yeah, if you could, it'd be much appreciated. I think it's good information for the committee also to consider, and also know what, on the second part of that, is what interest sort of figures we're looking at on that debt
Right.
over the 50 years, so we know where we are.
Well, each one obviously will be a different rate. We have got our average, so our average rates of borrowing are, like if we took PWLB, our average rate of borrowing is 4.37. So that's 3.32. Sorry, I'm reading the wrong line. 3.32. That's across 483 million. So that, to say, there will be a range of interest rates, but I picked up specifically the recent interest rates we fixed in of 265 of that was ranged between 1.37 and 2.54.
Appreciate that, Wendy. Obviously, we're aware of the risk going forward. The Bank of England have actually said interest rates will remain higher for longer.
Yes.
So I take it that's factored into any future projections for the next 2 or 3 years as a guide. The second part is just the last question, really, page 135. It's borrowed obviously £72 million over 12 months. Plans are being developed to replace, subject to competitive rates being secured and the interest being mitigated. The borrower will hold a refinancing risk within the medium-term financial plan for 2026. What is the mitigations being put in place, and what is the potential risk on that, Amber, on page 35, paragraph 4.9?
4.9. The mitigations are obviously tracking the rates that 72 million borrowed at sort of 9 months ago were considerably higher than what the rates we can currently achieve, and the mitigations will be really tracking the interest rates. So we'll be tracking the PWLB rates and looking at different periods. So if we can borrow for a little bit longer, they could be cheaper, as well as looking at other local authority borrowing to secure, like I say, the most affordable. We've obviously, as part of our budget planning and forecasting, we've made an assumption of what we'll renew those rates at, and we will just keep a track to make sure that we're keeping within our forecast. But as I say, while we're taking a short-term approach with it until we're at a stage where rates are going to, like Arling Close are predicting longer Bank of England rates. Like we appreciate that the rates are going to reduce at a slower level than they went up, but there is projections for Bank of England to reduce to about 3.5%. It was time. I know it's probably 2 years plus in the future, but we'll keep analysing as soon as we can get a rate.
So the refinancing term, you'll be looking at a long-term financing package as opposed to a shorter-term financing package. So it could be 20 years, could be 25, could be 50 years. Am I fair in saying that?
We've got the flexibility to match it to when we want the maturity. There's also other options that, like I say, with securing finance.
So through you, Chair, we work very closely with our advisors, Arling Close, and we do have a Treasury Management Board on a quarterly basis where we track everything, and it's like those key decisions about short-term versus long-term, and it's a bit like you would with your own financing, knowing when is the best time to try and lock into the best deal. So we keep it under constant review, but just to give the committee assurance, all the numbers are baked into the MTFS that went to Cabinet yesterday and will be part of the budget papers going forward.
Thank you. Mrs. Benny.
Thank you. Just a quick question, just building on what you were saying, David, around sort of with that group or committee that are making those decisions. Is there like an agreed risk appetite? Because you can make decisions, can't you, on more risky ventures and a better interest rate and a less risky thing. Is that a discussion that's discussed and agreed?
Yep, so I'm very proud of the fact that it's cross-party as a group. So the reason we do that is because you're making a decision today, and if you're going to lock into a 25-year loan, then who knows who's going to be looking after that going forward. So it's only seemed right to do that. I like working with Ireland Close because I think of the options that we have available. They are risk averse, a bit like me. So we actually have people like Wendy and Caroline pushing them the other way, and they pull us back. But I think that's a useful place to be in. So, like I said, we do look at all the options and try and weigh up the risk. But crystal ball would be a wonderful thing, wouldn't it?
Councillor Rainsford.
Thank you, Chair. First of all, can I say thank you to whoever produced this report, because it's very well set out for people who aren't accountants. I appreciated the explanations at the start of each point, so thank you for that. My question is actually about the shortage of local authority borrowing in the last quarter. Was there a particular reason for that, and are we expecting that to be available to us and not to have to necessarily go through PWLB?
Well, we've had assurance through both Ireland Close and the brokers who set up the inter-authority loans that there will never be a shortage. There will always be cash-rich authorities that are willing to lend or keen to lend, and obviously get a return for them. The one thing that has been highlighted, say, over the last 12 months is some authorities have moved from lending authorities to borrowing authorities because of the cost of living, the impact on various things on their accounts, whether it's DSG balances or cash collection of whatever that's affected them. So we are aware there is a smaller market of potentially authorities to lend, but they're still there. And just for information, we borrowed sort of 5 million last week with a borrower that's not lent to us before, so we're still able to go out and secure from other authorities. So that's a sort of reassurance. Whilst the market, it's the sort of famous supply and demand. While there's a shortage of authorities lending, which tends to happen always in the last quarter of the year, there's always a bit of a premium to pay. So that's where we're trying to be a little bit canny with Ireland Close to try and get our borrowing right and try and get the best rates. So we do sort of log on and check the PWLB rates every day just to see, like, always a good day, we can borrow some, let's borrow some money.
I'm very glad you're being canny.
Sorry, just to repeat, I suppose, life goes in cycles, doesn't it? So grant funding tends to come in quarterly basis on the first day of a quarter. So as you get through those 12 weeks or so, people are using up their money, aren't they? So we like the fact that we get money at the start of a process and then you eat through it. But so, people are always canny, is that the word of the day, canny when you get towards the year end of trying to hold out to get the best rates. So we try to plan so that we're not borrowing as a knee jerk in March. If we get to that point, I feel we failed. So we try to make sure in January, February, we got enough to see us through that difficult February, March, April period.
Okay, if there's no further questions, I'm being asked if we'd like to take a break, so we can do that now or we can do it after the Treasury Management Strategy. Personally, I think items 11 and 12 sit quite well together with committee's agreement. So shall we move to a short break after item 12? Yeah. Okay. So, item 12, again, Wendy, this is also over to you. Thank you.
If ever there was an incentive to get through an agenda item so quickly. So the Treasury Management Strategy, this report is required by Chartered Institute of Public Finance Accountancy as part of the Code of Practice for Treasury Management and Public Services. The strategy is produced from, is generally produced from strategy documents provided by Arlene Close, our Treasury Management Advisors. The templates produced for our 25-26 strategy only actually became available yesterday, so the versions don't generally change very much. The main thing that will be changing will be the economic and interest rate forecast, which you can appreciate has changed since with the budget, with different other world events. The report sets out key facts on our investment and borrowing. As mentioned before, there's been actually little movement from that presented at the last audit in governments. The investment strategy has a prudent approach and the approach we take is security first of who we invest our money with, liquidity second as access of funds, and this is where, like I say, we use money market funds where we can get relatively quick access, and then finally the yield. So that's our sort of main strategy for investments. Borrowing strategy, as I mentioned, I think before with the previous report, it is striking a balance between the appropriate low risk balance between securing the lowest cost of interest and the certainty of that cost through fixing rates to cover the period the funds are required. So where we're doing long-term assets, for example, or buying properties, that we would try and get that balance with longer borrowing at with the endeavour to get it at lowest rates. Prudential indicators are required under the Treasury Management Code of Practice, and they sort of set out the operational boundaries of borrowing, a higher authorised level it sort of includes provision for the unexpected events, and then the indicators set out the interest rate exposure between fixed and variable and maturity structure of borrowing, which I'll ensure is circulated at the next meeting, so it's clear what our current maturity structure is. In addition, the report focuses on, in addition to focusing on the financial aspect, it looks at also the non-financial aspect, which would be through our property regeneration fund, and the return from investments into property, economic development property. And then just to draw your attention to, Appendix A has not been completed as we were waiting the economic and interest rate forecast to be released by Arlene Close in November. But this will be updated and including in the strategy document as it leads through its life to approval at full council in February. So now that information's been released, we will update the strategy with that. So are there any questions on? Yes.
Councillor Fenn?
Yeah, Wendy, can I take you to page 163? This is how much we expect to borrow in the next 3 years. As I remember, a couple of years ago, we were averaging about 550 million with regard to the debt figures. 24 actual is 774.032, liabilities 118,500. Then there's a massive jump in year 25 of the PFI liabilities and finance leases by 900 million, taking us up to total debt of 961,422. And then 26 forecasts 1 billion and 53, and then 1.1 billion thereafter. So rises in 25, 18739, 92 million, and circulate to 80 million. I do worry, is this debt actually sustainable long term? What are the potential indicators that have been applied to this going forward? Because we seem to have, in the last 5 years, taken on a massive Right. And bearing in mind, all servicing costs have to come out the revenue account. So, and this is where I think all the reports previously by Grant Thornton that were presenting, there's always that worry that we are tilting now in 2027 to sort of the maximum headroom.
So, sorry, if I might need help on this, but I think in part of the reason for the jump in the numbers is, and it does say here, due to IFRS 16 accounting rules, which Jackson was talking about earlier, we are bound by those rules. The accounting rules have changed, so you can see from 31st of March to the 31st of March 25, we've had to put in different accounting numbers to take account of IFRS and PFI liabilities and leases. So there's a technicality in there. It doesn't mean that we're borrowing more money. It just means we're reporting it slightly differently. In terms of the borrowing requirement, I always think this comes back probably to some of the questions that we've had today about how cautious are we. This is kind of the worst case look. And I think if I were to look back at papers from 2 or 3 years ago, the upper boundary looked as if we were pushing through 900 million quite often. That doesn't quite come out. We're using here numbers and projections primarily from Arlene Close, who use their models. What tends to happen is grant funding comes in and takes over a lot of the financing for those projects further out. So you're absolutely right, it is looking like it's creeping up, but I think it is holding fairly stable in terms of the overall. Assurance again, we do model this, we do make sure that we've got all the borrowing costs included in the MTFS and the budget, so that is covered off. And I can assure the committee that over the last 6 or 7 months, we have done nothing but go round and round on the capital programme to make sure that we are investing in the right areas. And if we can stop, delay, defer, replace borrowing with grant, we have been doing that to the point that I think Wendy wakes up in the night quoting numbers from the capital programme. So there's a lot of governance around this and a lot of control around this. So I'm fairly comfortable that we are okay. Sorry, I'll hand over to my colleagues for further comment.
IFRS 16 is to do with leased assets, and it's about the right of use assets, and we're currently reviewing our portfolio of assets to see what impact that will have. So we don't have a definite figure as yet. We're working with Arlene Close on that. Essentially, it moves lease payments from revenue onto the balance sheet, which is why it impacts on the capital financing requirement, or the some of the upper limits that we have for what we call operational debt, if you like. So it's an accounting adjustment rather than a financial adjustment.
Yeah, can I just come back on that and say, when are we going to actually have a strategy to which we're actually looking at reducing debt as opposed to accruing more debt? Because we see all these strategies year on year, borrowing liability going forward, but we see no actual strategy to sort of mitigate this debt as we go along and try and reduce the pot and give us a little bit more headroom. Is that reasonable?
I think taking this in isolation it all comes down to context, doesn't it? So we are an ambitious council and we are trying to push forward, and we invest, particularly when we can see growth in future years in terms of business rates, council tax. So that's what I'm saying. We've done an awful lot of analysis on what our capital investments are to make sure that we are not just buying for the sake of buying. There is a process behind all of those things, and all of these numbers feed into the actual budget and the cost. Now, I am very keen to get the message across, and I'm certainly listening to what my colleagues at CIPFA have said to me and what my colleagues at Grant Thornton have said to me, which is in other reports, I need to pull out specifically how much we are budgeting to as a cost for our borrowing, versus the actual, and what percentage that is of our total spend. and setting some limits on that. And I think that's a better way of controlling it than trying to go back to what the borrowing is. It's why you're trying to borrow, and can you afford it? So I'll give you assurance that it is affordable as we stand at the moment, and I would still project that if we come back in 12 months' time and look at some of these numbers, they will not have reached those levels because grant funding will come in and fill some of the borrowing requirements.
Councillor Nicholson.
Probably a lesson learned from this paper, though, would be to have some of that narrative in the report. So could you perhaps take that on board, David, that you and your colleagues, as this is presented through to budget meeting in February, that there's a bit more narrative? This is obviously available to the general public, so if they're not attending today, they're just looking at figures, and it's not accurate in the sense of the context you've kindly given today provides that narrative that accompany the figures. However, I do share some concern that Councillor Finn's raised around there must be a point, even with the context of a growth agenda and us wanting to invest, that this council, there must be an upper limit within these financial years that you wouldn't exceed in terms of borrowing. Now, are they the figures that we got in the paper, or are they going to be the figures that are presented in February in line with the budget? Because I think it's important that there is an absolute cap, isn't there? Notwithstanding that you say we get grants, yeah, we get grants, but equally we see a number of capital projects in recent years far exceed their original budgetary value when they were at the conception stage and even when they embarked on their delivery. So that again puts pressure, as Councillor Finn's alluded to the whole sort of borrowing regime. So it's probably important to, not bury in the document, but have in budget papers what the absolute borrowing requirement would be for this local authority, because people are growing concerned around, because these are huge numbers, and for lay people they're even bigger. You work with them on a daily basis, but we don't work in these numbers at all, do we? So for the general public, context is important. Thank you.
I would just echo everything that Councillor Nicholson said there. That's very helpful. And I keep saying it's all to do with context, isn't it? But certainly, lesson I learned from the conversations when SIPRA were doing their review and talking about the capital programme was about those boundaries and just being more transparent. So that was very useful to me because I've been talking to Cabinet and corporate management team about there needs to be a limit. You cannot keep borrowing, which is, I think, the point that Councillor Finn's making more eloquently than I'm trying to respond to. So absolutely, but it can be brought in. So their advice to me, and when I see the report, maybe it'll be in there, we'll see, is I need to be a bit more open and transparent. So I'll take that on board, Councillor.
And Chair, probably just follow on, David, there obviously is a debt retirement schedule, isn't there? So beyond 2027-28, we obviously do pay debt off. I know we're adding to it, but it'd be useful in a long term to know, a graph showing that actually if you were to stop adding to your borrowing requirements for new projects, you would see it start levelling off and reduce, wouldn't you? But I don't know if you ever share that at all sorry, what page is that on, Wendy?
On page 144, and that was is a liability benchmark chart which are in close support us with completion, and that sets out our sort of looking at our capital financing requirement, which is the top line, then looking at our borrowing, and obviously it reflects a 5-year capital programme, and then it almost makes the assumption at the end of that 5 years our requirement to borrow for corporate and service borrowing ends, and we then are slowly repaying. We're required to make a minimum revenue provision as part of our revenue budget setting, and that revenue provision would slowly be used to repay. So you would slowly go down.
That's very useful. So I think Councillor Finn and I ought to reflect on the graph. Oh, we're here for future generations as well. You never know. We might invent a drug that we live to 150.
I think we have to all be aware that our social conscience says that we've got to look after future generations, don't we? So, but it is a useful summary. But I think that's very techie. Probably I could try and put a couple of sentences together that makes it a bit easier to follow.
Caroline?
I was just going to add a comment that minimum revenue provision is a bit like us paying off the capital. So when we purchase an asset, so for example, we own about £270 million worth of investment property, which is generating a good return. When we bought those assets, we are paying what we call minimum revenue provision every year for the life of that asset, potentially, which would be 50 years. So in 50 years' time, we will own that asset. We will still have that income stream, but we won't have any debt. It's just trying to explain that. So.
Okay. Any further questions on the Treasury Management Strategy? If not, I propose we take a 10-minute break and see everyone back here at... Sorry, boss.
Can we just agree this is okay to go to council?
Okay, well remembered. So just before we go to the break, can we agree that this report is okay to go to full council on the 25th? Thank you. So if we come back at 3:45, and yeah, see you all after the break. Thank you. All right, colleagues, we'll resume the meeting if everyone's ready. Hope you've all had a good break. We're still waiting for Councillor Finn. Has anyone seen him? Thank you. Okay, so Councillor Finn's on his way, but I think we'll get started because I'm aware there is still quite a bit of the agenda to get through. This is item 13, pages 183 to 194, the capital financing strategy. Wendy, it's over to you again.
Thank you, Chair. Third report. So, starting on page 183, the capital financing strategy. Again, this is a strategy document that will benefit from further updates from our enclosed treasury management advisors, with the production of their templates coming out yesterday. The key points to really note with this report from previous years, because it does follow a very similar format, is the introduction in 24-25 of additional governance through the Capital Programme Officer Group, with all projects going through the Capital Programme Officer Group to review, and then onward through to Capital Programme Board, and the final stage of business case approval in accordance with the Constitution, either through leader or Section 151 officer. Key points to note also is on, or the second key point is the 5-year capital programme. This is the 5-year programme as at the 30th of September, which is broken down at the bottom of page 188 and the financing at the top of page 189. This sets out a 5-year programme totaling nearly 373 million, and highlighting just under 92 million of that is financed through corporate borrowing. So this is the sort of financing that will feed into our increasing borrowing requirement that we reported on within the Treasury Management Strategy. There is also to note with that this borrowing requirement will need to be accommodated within the medium-term financial plan, and we've already factoring in figures every quarter as the programme gets is reprofiled or additions added. Also to highlight, 124 million of the programme is financed through service borrowing. So this would be this is an internal recharge that is financed by either budget savings or efficiencies being developed with that service, to almost like an invest to save arrangement. Treasury management, the capital strategy aligns with the Treasury Management Strategy, and we finance with financing the capital programme within the Council's medium-term financial plan, for both the revenue costs from both interest and the required minimum revenue provision. So at that point, I'll back to you, Chair, for questions.
Thank you, Wendy. So I'll throw this open for any questions? Councillor Rainsford?
Thank you. Looking at page, let's just skip for 188, and the figures there, there's a dramatic drop-off in the sums, say, for adults and health communities from 28 million down to sort of 0.84 of a million. Is there an explanation as to why there's that drop-off?
So what we're showing you is 5 years at a point in time. The service will be looking at other projects, so there will be other projects sort of arguably in the pipeline, and they will be progressed through CPOG. They'll be mandated, progressed through CPOG, and agreed as they're a project for the future, and will be added to the programme. But it is a typical design of a 5-year programme, with the fact that things do drop off, but if I show you this in 2 years' time, it will be different again.
So it's rolling, basically.
Yes.
It's constantly being added to and changed.
Yeah.
That's really helpful as an explanation to me and possibly people watching.
Yeah.
Thank you.
Anyone else? Councillor Nicholson?
To help Councillor Rainford, adult social care has traditionally very small capital programme. We are, though, building a new facility at Outland Road, the Parks Depot. So principally for the next couple of years, that's being funded, although obviously communities are outside adult social care, but that's a real bonus, because adult social care traditionally has had very little spent in a capital manner.
Thank you, Councillor Nicholson.
Anything else? Any further questions for Wendy on her report? No? Okay. Did you want to come back on anything? Okay. So the recommendation is that we present this to full council for approval. Is committee happy to do that? Excellent. Item 14. Ross, this is you, I believe. So this is the risk management monitoring report.
Thank you, Chair. So Q2 risk management monitoring report, regular part of your agenda. So I'll just run through it quite quickly. There are currently 18 risks in total on the strategic risk register. We have removed 3 risks in the last quarter. That's referenced the lack of adult social care workforce, as stability has been reportedly returned to the workforce over the last 2 quarters. There is concerns remaining around the impact of national living wage and employers' national insurance, which will be covered in a separate risk. We've also removed IT supply chain constraints, as we consider this risk is reduced to a level where it's no longer considered a strategic risk. And following recruitment to the senior leadership team, the senior leadership capacity risk has also been removed from the strategic register. As usual, we've provided you with, or we've attempted to provide you with graphical representation of our risk appetite and how our risks sit against those. But if I just highlight the top 3 risks which currently exist on the register, the first concerns cyber attack. Now, as previously discussed, this is one that is going to remain high. We have a large amount of mitigation in place against cyber attack, but even with that mitigation, we will expect to receive continued cyber attacks. And as members will be aware, we took down MortGov, for example, last week, just to make sure that we weren't attacked. Finance, the council's expenditure exceeds the resources available to meet that expenditure. Now, I think we've had a good discussion about that today, but the mitigation is within the paper, and of course the MTFP went to Cabinet yesterday and will come to scrutiny in December for budget scrutiny. And integrated commissioning continues to be increased and sustained pressure on adult social care budget. The mitigations included in the papers. Chair, happy to take any questions.
Thank you. So any questions on the risk report? Councillor Finn?
Yeah, just to follow up on what Ross said regarding the medium-term financial plan coming before scrutiny in December. Could the committee have a copy of the papers as soon as they're available, please? that
Through you,
reasonable?
Chair, I'll send you a copy of that now, Councillor. It was published publicly yesterday.
Any further questions on the risk report? No? Excellent. So now move on to item 15. Ross, this is also you. This is the performance and accountability framework.
Thank you, Chair. Well, the next two items really just more of an update for the committee. So in terms of the, in reference to the performance and accountability framework, you'll note from the audit reports earlier on the agenda that we were asked to create a data quality strategy. So just to let you know that that has now gone through its internal governance processes and been agreed by the corporate management team. So we'll be able to bring that to you soon following a discussion with the portfolio holder. We are working with our new Chief Operating Officer to look at how we can implement AI across our data to make our data pipelines a little bit more robust and consistent. And this will inform our data to intelligence strategy, which we'll be developing over the next couple of months with a target date of March 25, and at which point we'll bring it here, Chair, for review. But it's just really to provide that update. Thanks, Chair.
Okay, thank you very much. And also over to you now, the committee self-assessment, agenda item 16.
Thank you, Chair. And again, just an update and a reminder, members should have received a Microsoft form this morning, which is a questionnaire that's going to help us inform the annual report that we'll need to provide to Council in the new year. We will be asking not just yourselves, but former members of this committee to make a response as well, because we want to capture some of the learning that we might not have done over the last couple of years. So just a request to please complete it. Take some time though, because it is pretty involved. So it'll probably take half hour to an hour at least to complete that one. I know sometimes the forms we send are quite quick, but this one is going to probably take some thought. Yeah, they are getting longer and longer. Sorry about that, Councillor.
It's good to know it's a thorough self-assessment.
Will people who've subbed onto committees be asked to fill in the form as well?
Yes, and I gave Councillor Noble that bad news earlier.
Any questions on the committee self-assessment? Excellent, good to hear it. Thank you. So if there's no questions on that, we'll move on to item 17, which is the electoral cycle consultation. Liz, I think this is you, and then Caroline afterwards.
Yeah. Thank you, Chair. So this report's coming back to you following the completion of the consultation process, which you approved back in July. Appendix A sets out the consultation responses. So you're being asked to note the outcome of the consultation prior to it being submitted to full council on the 25th of November. Thereafter, the result of whatever the vote is at full council will be submitted to the Boundary Commission to finish off their council size deliberations and warding pattern work. So if I quickly run you through the analysis at Appendix A, I'll give you some highlights, and then I'll hand over to Carolyn to give you a bit more of a detailed analysis. So I think you're all fully aware of the background to this and how this has happened and how we are where we are. The report sets out the methodology for the consultation, how it was carried out. It was over an 8-week period between the 24th of July and the 22nd of September. It was a single response question, so people were asked to choose whether they would prefer to move to whole council elections, to keep the current system, or have no preference. The The consultation is a statutory requirement, so it's something we had to carry out as part of this process. And I'll let Caroline give you a bit more detail about how that was promoted. So in terms of the response itself, we received 7,055 responses to the consultation, and 4 stakeholder responses from the university, the Police and Crime Commissioner, Plymouth Community Homes and Plymouth Marjon University. The responses were split. 4,063 wanted to change, 2,443 stay the same, and 545 no preference. The report gives you some detail around who the respondents were, their ages, where they live, health and disability details, and also gives a bit of analysis of their reasoning for the way they voted. It's fair to say that's a sample of the responses, but it kind of gives you an idea of why people gave the answer they did. So I think I'll leave it there, and I'll let Caroline pick up anything else that I have missed. Thank you, Caroline.
Thanks, Liz. Yeah, I think you've pretty much covered it there. I just wanted to say as well that we did reach out to some groups and did some face-to-face work with the Youth Parliament. We also arranged some councillor sessions for people to come along and ask questions and to find out a little bit more about it. And we also reached out to the Plymouth Area Disability Action Network, PADAN, to have a discussion with them. And all in all those conversations, we were able to promote the consultation and ask them to go away and also promote it within their own organisations and networks, which was great. And I'm sure that the Youth Parliament work did bolster our young people's response. It was extensively promoted. Our communications team and our electoral team did a great response for that, and we were able to email out to all of our residents that are on the electoral register, which I'm sure had a good boost, and also on our newsletter. Social media obviously played a key role as well. I won't go into the response. Liz has already spoken about what the response is. And I mean, I think we did have good representativity from across the area, from the city, and from different groups. In terms of the comments, we did take a sample. We had over 4,000 comments. It was a lot to look at. So we took some advice. We did sample 800 or just over 800 of those comments until we kind of reached saturation, meaning that we were looking at the same comments. We weren't seeing anything new coming through. We coded some parent themes, which were around resources, stability and democracy. And in terms of changing to whole council elections, if you look at your table 5, it kind of breaks it down even further. But if you bring that up in terms of stability, we had 331 responses. Resources was about 230, and democracy was around 222. And stability was around effective governance, consistency of the council, making sure there was a lot of comments around having time for implementation if we were to change to whole council elections. But equally, for those who had selected to keep the current system, democracy and stability also played through, and that was around accountability, stability, around having fresh candidates every year, being able to have good councillor engagement, good visibility with the councillors. So a lot of the information, a lot of the responses that we got were very reflective of the advantages and disadvantages of each of the options that we had consulted on. It was quite reflective of that. I think in terms of the additional analysis, just really quickly, we did break down the result by each of the groups that we collected information on. And in all but one of those groups, the majority had selected to change to whole council elections. The only group that didn't and said keep the current system was serving MPs and councillors. But again, you can see there was 28 responses there. And finally, yeah, we didn't want to forget that the stakeholder work that we did, the Chief Executive wrote to a lot of our partners across the city. We have 4 of those responses. Each one of those responses, you could see that they had some deliberations internally and talked to their senior leadership teams around the advantages and disadvantages of each one of those, came back saying that they would favour changing to whole council elections. So that was just filling in some of the gaps on the report. Thank you.
Thank you, Caroline. So I've seen a couple of people indicate. Councillor Finn, I think you were first.
I just want to say this is no slant on the council's work. I think the PR work that the council did in reaching out and the communications channels used was very well thought out, very well constructed and very well taken forward. However, if you look at it academically, when you qualify your analysis, it doesn't actually reach the threshold of statistical significance. So you've gone out there, you put the message out there, but if you look at the responses of 4,063 against the population data, it doesn't actually reach that threshold. I appreciate it's got to go to council, and obviously it'll be the council chamber that actually make that decision. But I think you can't read a lot into this. You can strip all these figures out and say 50%, but 50% of such a small a response is in effect a negative response to the question. So I think it'll be left to the members to actually sit in the council and discuss in their way to what they want will be the primary, will give the primary direction to where we go on here. I know something that's been raised a couple of times was obviously strategically, if we look at it, this questionnaire was drawn up 2.5 years ago, or 2 years ago, I believe, but it was never promoted because of the so-called waiting on Southampton scenario. Well, what that's actually led us is against a brick wall now, that instead of having all-out elections in 2026, we haven't. So you've got elections in 2026 and we now have elections in 2027, which imposes a further cost on the council, something that we were actually arguing against. You know, to save the council money is actually, through the delays in this process, has actually caused us greater expenditure as opposed to a lesser expenditure. So that's just where I'm coming from in regard to it. I don't think the committee needs to read too much into that because, as I said, it isn't significant. The responses weren't enough to generate a clear yes, we go with, no, we don't. That's just from my perspective. Thank you, Chair.
Okay, I have Patrick, then Mrs. Benny, and then Councillor Noble.
Thank you very much indeed, Chair. Well, I'll take the complete opposite view to Councillor Finn. I think 7,000 people during August and September who did respond to a consultation exercise is actually a good response. Because generally, over the years, if you consult on the council budget, you've probably got 100 people representing an organisation, the population at large, to talk about council budget. So, you know, it's horses for courses, isn't it? You know, generally, ward members, if you convene a meeting, you put a literature out, only a small number of the population actually respond when you directly contact them over an issue that would affect them. So I actually do take the opposite view. I think it's good, and we should thank 7,000 residents for making the effort to respond. It is a pretty dry subject for most people. It's important, and it's particularly important for politicians, but it's not probably so emotive as perhaps many of the other issues that we could have a debate with the local community over in our city. So, no, thank you to the public who did respond. I think I would actually take the evidence that's provided that, you know, it's unequivocal that actually we should move to all-out elections. And clearly we'll have a debate about this at full council, but with the exception of politicians who appear on the surface to want to maintain elections by thirds, and I've absolutely no reason to understand why you'd want to stay with elections by thirds, because actually the inefficiency within the organisation is massive.
Councillor Nicholson, can I ask that you reserve your opinions on the merits of all outs versus thirds for the debate at full council?
Right. Why is that, Councillor Allen?
Because it's not the role of audit and governance to influence the outcome of the vote in chamber at full council. I just am concerned that we could be seen to be coming to a view as an audit and governance committee, and I'm keen to avoid that because we are supposed to be impartial.
Yeah.
But if anyone who's watching or reading the minutes or watching the transcript later on the recording please feel free to lobby your councillors if you feel strongly, and we can take that forward to the debate at full council on the 25th of November.
So I know what you say, and I'm not going to move any different recommendation to the one that's to be noted. But I think it's our first opportunity to comment, and I think the evidence is there that members, when we get to full council, should take on board on the evidence that's been provided. So thank you to the officers who conducted the survey, Caroline, and anybody else who assisted you in putting obviously the report together. And I look forward to a debate in due course.
Thank you. I also echo the work that's been done by the officers and to everyone who encouraged the participation in the consultation. I think, Mrs. Benny, you indicated?
Yes, please. Yeah, thank you. And yes, it was a good report. And I suppose my reflection is very much around, as an organisation, I saw it through different routes, and you could see it out there. And I suppose my reflection is, if we as an organisation want to be able to say, you said we did, then actually, then this is this is an evidence base around what people are saying. And it felt like there was a lot given the time. So that's my reflection, and I'm independent, and actually I do not have that's my role here. Yeah, I feel very much, and the commentary that I read in some of the social media were, is it worth it? Because will people take notice? That type of thing. So I think that needs to be part of that conversation going forward, that people had a concern, quite a lot actually, although I can't quantify it now, but it was very much around, is it worth bothering, because do they ever take notice? And I think that's important in terms of if a you said we did, whatever the outcome there happens, we as an organisation need to be really clear about the rationale for any of those decisions, because it has to be fair for the people that took the time to offer a view. Thank you.
Thank you, Mrs. Benny. Councillor Noble.
The number of respondents was quite a bit higher than when this has been done in other local authorities. I did the survey. I don't recall having to validate my name or whether I was registered to vote in Plymouth. So how can we ensure this hasn't been not extra votes, or people have been double counted? How can we ensure that? What's the process been to ensure that is 7,000 unique people that have voted, or given their indication, so we say?
Yeah, of course. So I don't think that we can be 100%. However, we did do some validation on the when we drew off the results. We had a look in terms of duplications, because sometimes the system can trip out some duplicates. But if you look across all the variables, all the questions, you can usually pick those out quite quickly. What we can't ward against is that one person didn't respond 10 times with different answers, or just did something slightly different, gave us a different age, we wouldn't be able to ward against that. This was an open survey. It wasn't a randomly selected survey, so that we didn't target households, and only those households were able to respond. This was an open snowballing kind of survey that we were relying on the promotion. So we wouldn't be able to guarantee that at 100%. But as Councillor Nicholson mentioned, it is quite a dry survey. I think you need to be quite quite passionate about it to want to go there and complete it on a number of times. But like I said, it is a very high response from this type of consultation that's been done elsewhere. Very high response.
On some of the narrative that's been summarised, there's a summary of the letters that's been received, and some of the other ones in the table where you've grouped some of the comments into themes. Some of those might be imagined, not the stability
there's a high number of variables that would give longer stability or financial savings, if there are any. For instance, and there's some things I don't know whether that perhaps from the letters that are put there, it mentions about the 4-year. Oh, so I've gone on the wrong. Bear with me, sorry. The Crime Commissioner response mentions it being in step, is election cycle every 4 years. That would align with the Police and Crime Commissioner elections. I mean, is that factual? Would if we, given this the boundary of using it, would that actually line up? The thing about Plymouth Community Homes, they say about a 4-year cycle, but that appointment is people are appointed every year, and that's what the first council meeting of the year is, to appoint to outside committees. And people might need to change off a committee through conflict of interest, maternity, councillors do pass away and things, for any number of reasons there. And also like Marjohn's, that's in my ward, and very few people vote that live in their halls, although they might be commenting on the fact of stability, that what the council and their organisation does, but then that's obviously that's subjective, and many things would affect that relationship. So how's that kind of?
Through you, Chair. So I think the Police and Crime Commissioner's response was an interesting one. I'm not sure how they would align, other than they're both a 4-yearly cycle. So I think that's probably where that's come from. In terms of governance and stability to outside bodies, you mentioned PCH. I mean, absolutely, the yearly appointments could continue. It generally does, though, offer you an opportunity to put someone in place for a much longer period of time. And certainly some of the outside bodies that we deal with would prefer to have that consistency over a period. But of course, we do it annually. It's the right thing to do. We do it at the AGM. That's completely the correct thing to do. I think that's the two main points.
No worries. Thank you for your question, Councillor Noble. Councillor Rainsford.
Yeah, just a point of clarification. The committee here are being asked, are we not, to recommend this report, which is about a consultation, not a referendum?
Yes, this is a consultation, not a referendum.
Any further questions or comments on the electoral cycle review? Okay, so the recommendation is that we we received the electoral cycle consultation summary report at Appendix A in your pack. Recommend that City Council determines at its 25th of November meeting whether to make a change or not to its electoral cycle arrangements. The second recommendation is that we note the amendments to the council size submission at Appendix B in your packs, arising in a change in forecasting date to 2031. And the third and final recommendation is that we authorise the monitoring officer and chief executive to make any further minor forecasting amendments necessary, and to finalise the addendum required setting out the electoral cycle decision prior to submitting the response to the LGBCE, that's the Local Government
Boundary Commission for England.
Thank you, Boundary Commission for England. We got there. Are we happy to agree those three recommendations?
Yeah.
Brilliant, thank you. So now move on to item 18. This is the tracking decisions, pages 215 to 218 on your agenda packs.
Just happy to say the questions, Chair.
Any questions or comments on these? No? Okay, we'll move on to item 19, which is the work programme. And I think something was mentioned earlier that we were going to double check was part of this upcoming work programme. The debt recovery.
Yeah, we've got that.
We've definitely got that on the work programme.
So we're going to add that on. That will be we assume that will be led by you, David, supported by colleagues from legal and procurement.
So when are we likely to be able to fit that in the programme, please?
Yeah.
If you produce a written report, it may not be much to debate. Depends how much we are educated.
So January.
Any other comments for the work programme? No? Oh, yep. Thank you, Anne.
So through you, Chair, we've scheduled an additional meeting for which you'll all get the invite for shortly, for the 11th of December. This meeting has been arranged to allow for the publication of audited accounts for all financial years up to and including 2022 to 2023 by the statutory deadline of the 13th of December. This will clear the backlog and enable a focus on recent accounts to provide the most up-to-date information. As I say, we're scheduling that for the 10 a.m. on the 11th of December, and I'll send you the invite shortly.
Can I just ask, so is that based on the capitalised direction from government?
That's based on the conversation that we had right at the start of the meeting about the backlog, the backstop to clear the outstanding audits.
No, I'm confused. So I know we had that discussion, but you can't sign any of it off unless you get the capitalisation direction, can we?
Yes, we can, because we have reached agreement with our auditors as to the accounting treatment. So that's all in line, and that's the work that we've been doing, and that's why we've got to this point. So yeah, they are happy to give us their opinion, and we are happy with their opinion.
So we need to come to a decision about the date of the interim audit governance meeting.
And so we've confirmed it as the 11th of December with, with Grant Thornton, yeah.
Okay. And if there's no other items of business, we can draw the audit and governance meeting to a close. See you on the 11th of December, and look forward to an interesting debate on the electoral cycle in full council in a couple of weeks' time. Thank you.